Now, even by the standards of Wall Street's long history, it was a brutal week to trade. As markets sank and soared, a new fear spread across the Wall Street. Is America's privileged status in global financial systems at risk from Trump's tariffs? If you look at the market as a whole during the past week, you will not miss the devastating impact of Trump's trade war on American assets. Monday saw the largest intraday gain since 2020, sparked by a fake social media post before everything was reversed. The next day, the S&P 500 almost went into a bear market. Stocks gained on Wednesday after Trump's tariff pause, but reversed again on Thursday and Friday. The tariff reversal sparked cross-asset volatility, with stocks, bonds, gold, oil and crypto swinging wildly this week. The 30-year Treasury yield surged to its highest level since 2022. The 10-year Treasury yield saw the biggest jump since 2001. Swings in treasuries and the dollar have led some to question the famed safe haven status of the U.S. government. Now, havens such as the yen, Swiss franc and the gold have been on the rise, while the euro rose to its strongest in 3 years against the dollar. Options traders have turned bearish on the dollar for the first time in 5 years. A country's currency and bonds selling off in tandem is a classic trait of an emerging market. This is what key trading patterns in U.S. assets reflect at the moment. And for more on this, we're now being joined by Subhash Chandra Garg, former Finance Secretary of India, live from Delhi. Thank you so much for joining us on World Business Watch.
Thank you.
Now, with markets returning to the red, the carnage continuing despite a delay in tariffs, how do you see this play out in the next week?
See, last week was one of those rare but very much expected volatile week all over the world. And what is now actually coming to the front, and which is most concerning, is the sell-off in the bond market. The way the US bonds are sailing, the yields are rising, suggest that there is now large players outside the US who are liquidating US assets, especially the bonds. Is it China? Is it someone else? Because there is a fear now that if you can do such a thing as you did about the tariffs, can you do similar things for currencies, for your assets in US? And there is a precedent. Biden did to vote the Russian assets or Russian foreign exchange reserves in US. So this is a very uncertain, very difficult time. Equity markets will keep on, I think, having a volatile day for next couple of weeks. So this 3 months pause, where does it lead to? Their contradictory messages. Trump said that 75 countries are rushing to join to negotiate with him. The White House said that only 15 countries have made their proposals and they are examining which one are worth presenting to President Trump. So it looks that there is a great deal of uncertainty even on the tariff issue. And what might come out in the next 3 months is not known. I think from next week onwards, you would start seeing some sort of clarity. If there are very few countries who are willing to negotiate, and that would be known from next week onwards, I think we are in for still long, difficult times.
Right, and of course, so we were discussing this last week as well, with China-US tit-for-tat trade war not showing any signs of slowing down. How will this impact India's economy?
See, the Chinese-US trade war now has reached to a point where both imports and exports of both the countries from each other has virtually stopped. You might have seen the Chinese finance ministry communication yesterday. They said, now we have raised it to 125%, but we will not raise any longer because there is no demand for US goods in in China now. Similar would be the case that there is no demand for the Chinese good in US. Now that makes a very impactful implications for the rest of the world. Now, if you imagine that the Chinese goods which are going to America and the American goods which are coming to China are no longer going to each other, then what happens to these goods? That is what I think will decide what happens to India or anywhere else. Now, obviously, Chinese would try to find market for their merchandise which was going to US, and they may also be interested in substituting rest of the world's import from US that we can provide you. So how does China play out with respect to the rest of the world, and how does rest of the world take this? Do some of them take this as an opportunity that China is in the market selling a lot of goods which they need, either from they're buying from America and which America was buying from China? Are they available at cheaper price? Should you stock them for times to come, or should you fear dumping being taken place? So I think that would be the tone which I think will set up for even India, that how does India deal with this kind of situation which is emerging. So lots of things are not really known, and how the countries behave and their negotiators behave. It's not only negotiating with US, it's also negotiating with these surpluses which are going to flood the market in times to come. That will decide how things pan out.
Right, and another thing that I wanted some clarity on, there is speculation that higher tariffs on India's competitors in the region will benefit India. So what's your take on that?
See, that I think is not a very serious observation. Higher tariff to China, let us say, that has destroyed the market for the US supplies from China. That I've already discussed how this will flood the market and how do you deal with it. The higher tariffs on others, for example, Vietnam, South Korea, and others, have now been paused as well. So Chinese good via Vietnam going back to US, I think that seems fairly certain. That doesn't give you or India any great advantage. And we may also need to look at what can we supply, what China was supplying to America. For example, most of the Chinese supply to America is computers, solar panels and things like that. We don't have any competitive advantage. We don't produce them. We don't have technology. So I don't think India can gain at the expense of others.
All right. Mr. Garg, thank you so much for joining us on World Business Watch with your insights and your perspective on this.
Thank you very much.